Welcome to the Angel Research Podcast. We got some more Jasons here.
Yeah.
I'm Jason Freert.
Jason Williams.
And this is Jason Williams. Yeah. And it's been a bit, but we're back doing a podcast. You've been here recording some other videos, so we figured we ought to jump in and get your take on...
doing some top stocks videos for the Wealth Advisors.
Yeah, that's got to be our most popular video series, so you guys should check that out.
It's a fun one. We really enjoy doing it.
Yeah, so I definitely think you guys should check that out. We'll link it, or if you just subscribe to the channel, it'll pop up in your feed. We email it out and all that kind of stuff. So, but we were just talking, let's jump into it. It's 100 days for Trump.
Mm-hmm. Trump's first 100 days
today or tomorrow or something. But you just told me it's the worst 100 days for the stock market
since Richard Nixon.
Since Richard Nixon.
Yeah.
Okay.
Yeah. Not somebody you want to be compared to.
Right.
Typically.
It's not. It's not good. And seemingly, it's gotten just a tad bit better recently, right? Because it was bad there for a while, and then they did the tariff pause, and it kind of
5 positive days in a row now.
Right. So it's come up a little bit, but it's still the worst.
We're still down for the year. Definitely the worst since Nixon here.
Right. So it'd be interesting to see how much that plays into the policy going forward.
Mm-hmm. Because, his first term, Trump definitely seemed to use the stock market as a barometer for his performance as president.
Right.
And so if the stock market is down, that means he's doing a bad job.
Yeah.
He doesn't like that.
Right. And it's really kind of funny because that now if people jump on him saying, hey, it's the worst 100 days, like what happens if the next 100 days is like the best 200 days?
Right.
Like then you got to be like, oh, I guess he was the man, you know what I mean? So you kind of got to flip in there. I think, bottom line is it's the trade policy, mm-hmm. right, that people are not sure about. I think is the biggest way to say that there's just the biggest question of what's going to happen, right? And people don't know.
Get announced, and then a pause gets announced. We're 30 days, give or take, into the pause. We've got maybe another 60 days left. Are they going to come back? Are they not? Are people negotiating? Are they not? Who's telling the truth? Allegedly China has come to the table, but China says that they haven't come to the table.
Right.
And it's like you don't know because this administration, I don't want to say that they lie, but they do have the tendency to exaggerate.
Right.
And China's government lies. I'm not going to say that they have the tendency to exaggerate. Like they will just report false information, because it looks better for them.
Right.
And, it's the same with Chinese stocks that trade on American exchanges. They don't have to follow the rules. They don't have to use generally accepted accounting principles. So you don't know who to believe. Is the White House exaggerating or is China lying?
Right. And so it seems now that almost all the other tariffs were paused except for China, mm-hmm. right? Mm-hmm. So it's almost like, hey, we're gonna show everybody else that, hey, China's not really playing ball, mm-hmm. and if if you're kind of nice to us, we'll be nice to you. But China's kind of, you think China's calling the bluff, or is it just?
I don't know.
That's just how they go.
I'll be honest with you. I think that going into everything, the world sort of had this idea that everybody was going to band together against the U.S. when this happened. But what seems to more be happening is everybody's coming individually to the U.S. and being like, hey, let's work something out, guys. This is silly. We shouldn't do
everybody's
this.
Self-interested,
and
for
so
sure.
it's like, if everybody was going to band together, then they would have banded together and they would have gotten under China's umbrella instead of ours. And they didn't. They didn't go to China. They came to the U.S. And I think China sees that and is like, hey, guys, don't you go negotiating any deals with the U.S. at our detriment. Yeah. And the thing is it's kind of like the rest of the world kind of needs to step back and look at how China does business and be like, well, all of your business is done to our detriment. You steal intellectual property. You don't respect anybody's rules. You dump products onto markets, and you've been doing this for 20 or 30 years, and you keep saying that you're going to stop, but you don't. Yeah. And so I think that it's sort of, there was a lot of tough talk going into this, but once everything actually started to play out, people got a lot less tough, and they were like, hey, let's work something out. We really do. We want to be. We would rather be reliant on the United States than on China.
Yeah, well, and it's interesting. dichotomy, I guess, because China is essentially, dictatorship, right? Mm-hmm. So they have the luxury of sort of waiting around for either like a new politician to come in, either on the U.S. or in these other countries, right?
That's definitely one of the things
democratic,
that,
right?
Those lifelong dictators can count on is that, like, hey, if I wait 4 years, I'll probably get somebody new to talk to.
Right, exactly. And it's almost like the same thing in like Ukraine, right? Mm-hmm. It's like, hey, we're doing this, and now Trump wants to do something different. They're like, well, maybe I can just hold off. I don't know. That seems like a long time for them to hold on for that. But it does seem to be the time scales that everybody is playing on are different, right? Mm-hmm. Particularly in terms of China. So there's just like 10 years to them is just like whatever, So the biggest impact now, I think, is the rare earth situation, right? Mm-hmm. So I don't know exactly. It's so hard to keep on exactly where, if tariffs are on or off on a given hour.
Right, it really is.
But they basically stopped. They basically were saying, hey, we're not giving you guys rare earths anymore, and they control something like 90% of the rare earth market.
A ridiculous amount. And that's something that China's been really good at. And, one of the things that I appreciate about Donald Trump is that, like, and it's something that people hate about him, is that he can see I don't want to say good things, but not even positive things, because that has like the connotation, but it's like he can see the things that people that we don't like do that are good for the people that they are representing. Right. So he sees that China's leaders, the stuff that they do is bad for the U.S., but it's usually good for China. They're trying to set up China to be dominant, and like he wants the U.S. to be like, he wants U.S. leaders to feel the same way about the U.S. as Chinese leaders feel about China.
Right.
And stuff like that. And like those are the compliments that he pays to these people. It's not that like, oh, this guy's a great guy, we should be doing more things like him. It's like, no, this guy really cares about his country, and our leaders should care about our country the way he cares about his country.
Right. And it just comes down to self-interest and sort of understanding that. So it'll be interesting to see how it plays out. But in terms of, I mean, we kind of have basically two situations here where I think a lot of people still have the consensus that, hey, like this is sort of needs to be done, and long-term to fix the trade imbalances in the rest of the world and bring, I think COVID's the catalyst, right? Because COVID happened, and then they're like, oh, like all this shit's coming from fucking China, like, oh, like medicine and stuff, like, oh, we can't get XYZ because of this. And it wasn't because they hated us or didn't. It was like they literally shut down everything, or they couldn't ship the stuff over. So there was no like political element to it, at least for
the supply chain.
The first part of it. And they're like, oh, we are really reliant on these like just-in-time supply chains that are heavily controlled by other countries that don't have the same rules as us, and so it exposed it. So you have that element of like, hey, like maybe we should have some of this. Maybe we should diversify, not just necessarily into the U.S., but with other countries around the world, and not rely on there. But now it just becomes Trump takes that further and just says, hey, we're, these guys are, ripping us off, so to speak. So to me, whether it is or it isn't, I think the resiliency back home is more important, to be like, hey, look, if something crazy happens again, like a COVID or whatever, like is everything going to grind to a halt, and are we going to get
are we going to be able to continue to do things? Are we going to be reliant? And you're always going to have like globalization is not a bad thing. That's like free trade is part of globalization. And if trade barriers were removed everywhere, there were no tariffs, there were no taxes, there were no import quotas, that would be more beneficial for everybody. Like economically speaking. Any trade restrictions just create what's called deadweight loss, which is money that leaves the economy and never comes back. And it's difficult to grasp that, because it's like, oh, well, it goes somewhere else. But no, it actually like just doesn't get used at all. It just gone. And it's not like that broken window theory where like, oh, like a criminal breaks a window and that means that this person has to hire a repairman to fix the window. It's not like that. It's just gone.
Yeah.
And the benefit of that, of that money is gone. But you're always going to have trade imbalances too. Like that's the one thing that we're never going to fix. You can't fix trade imbalances with tariffs. I'll say that. Vietnam is never going to buy as much stuff from the U.S. as the U.S. can buy from Vietnam, and it's just because they can't afford to. That's like expecting my niece to buy as many of my subscriptions as I buy of her lemonade.
Yeah.
From her lemonade. Like, I've got a lot of money. I can buy a lot of lemonade.
Yeah.
She gets, a like $5 a week allowance.
Yeah.
She can maybe...
Well, it's just not even just the money, just the sheer people,
the
right?
amount of
that's
people,
just,
yeah.
And I don't know if, like, some of that's, like, per capita on those calculations. Like, they got to have something with per capita.
I don't know. They looked like really simple calculations.
Yeah, so
I'd like to hope that there was some per capita, but there might not have been. And I mean, how is I don't know, Bangladesh going to buy as much from the U.S. as we buy from them?
Yeah,
they're tiny. It's not. Yeah,
that's just silly. But I guess it's just one of those things of like trying to put the problem in, I guess, the simplest terms for people in terms of that. So, so anyway, that's the long-term view, right? We got a long-term view is like, hey, maybe if some of this stuff it gets fixed, then, we have a more fair, so to speak, setup long-term for investing in this country and abroad. But then there's also the short-term, right? Because we don't know when that's, 5, 10 years, I mean, or just a few years. What's going on in the near term, right? Because we have these tariffs, and so, it's like there's up and down, and it seems sort of ripe for, like, sort of trading the market, right?
Oh, definitely.
In terms of, hey, like, and so when you talk about, like, how do you differentiate between trading and investing anyway?
Well, I mean, so... I always position myself as an investor.
Right.
Overall, I'm a long-term investor. I think that Warren Buffett's got a good point that your holding period should be basically forever. If you're buying a company, then you shouldn't be selling it unless like all of a sudden something changes about that company to make you not like it anymore. But in situations like this, the market's been falling. So like my long-term positions, they all lost. I'm not selling them because nothing has changed about the company. Something's changed about the stock market.
Right.
And so, adding to positions and things like that. But, you see a lot of red in your portfolio. And having been involved in the markets for as long as I have been, I know that markets go through corrections. Markets every year since 1992, the S&P 500 has had a 10% correction. Every single year, at least one. We had one this year, and everybody panicked again. I mean, it's was that over 30 years of this happening every single year, and every single time the world is ending. Right. And so if you see this and you recognize this pattern, then you can trade that pattern, and you can buy when everybody's panicking, and then you can sell when everybody realizes that they shouldn't have been panicking. And in some of these cases, on stocks, you're talking about maybe 5, 10. Some stocks are making 20% swings in a day.
Yeah.
You incorporate options into that, and you've got thousands
got some real
of
leverage,
percent sometimes. You incorporate stuff like 0 days to expiration options, and they've been described in financial circles as lottery tickets, but it's a little bit less. So you have no idea what numbers are going to come up when they pull the lottery.
Right.
But if the market's selling off for no good reason, you can pretty safely bet that it's going to recover.
Right.
So I always tell people, as a long-term investor, you have what you would call strategic positions. Those are the stocks that you are, the positions that you're in. Those are your retirement. You're going to hold on to those forever. But you can also make tactical trades. I own a lot of NVIDIA. I don't feel comfortable adding more to the position, to the long-term position, because it makes up such a large percentage of my portfolio already. But when I see the stock sell off by 50% and nothing's changed about the company, I know that there's a tactical opportunity to buy those shares with the intention of selling them,
right.
a few days days, a few weeks later when they've recovered.
Right.
You know,
and that's
not
where you
actually
can
adding to
utilize
my long-term
options to
position.
kind of get some higher leverage on there
Exactly.
as well.
Exactly.
Yeah. That's interesting. Yeah, I've been, there's the idea of a trader's market, and and I think
And volatility definitely, brings a trader's market.
Yeah, so it's really interesting, and it's not something we cover a lot on here. We do have editors that will, trade momentum and trade, just like news-based stuff. But getting into some of those things is interesting to learn about, and people do find interesting. You kind of have to have some time on your hands to execute that stuff. You know what I mean? I prefer, hey, like I'm going to watch the market a little bit, maybe invest here and kind of sit on it for a little bit and kind of do that. But there are ways to accelerate your returns using trading if you sort of follow the right people. So you've been, I know you've been investigating and sort of teaming up or sort of partnering with a couple of traders to just check out their strategies, right?
Yeah.
So I don't think, we're not going to see Dubs out here doing day trading, all day long.
Dubsy day traders not coming, guys.
No,
and that's actually one of the things that I've talked about with these traders that I've been sort of teaming up with, is that that's one of the things that keeps me from trading, is that I spend my day researching investment trends, writing about things so that I can, send this information out to my subscribers, making videos, doing podcasts like this. I don't have time to sit there and stare at a screen all day. I wouldn't be able to take care of the people who rely on the research that I do and everything. And so to be able to have something, where you can sort of, like you kind of said, watch the market for a little bit and then set it and forget it. And, that's what I do with my long-term positions. I use limit buy orders and limit sell orders. And like, okay, I know that this company's good and I really like it at $20, but if it drops down to $15, I love it. But I don't have time to be watching the stock all the time and wait to get to 15 to hit the button.
Yeah.
So, I can just sort of set it and forget it. And I met a trader recently who basically has a strategy like this where, you can go in, you look at the market in the morning and you sort of figure, which direction it's going to head, or not even necessarily which direction it's going to head, but like what magnitude it's going to head in either direction. Yeah. And then depending on which direction it goes into, you can set up your trades in advance. You can, and once the market enters, the certain window, and basically you're setting it up like, hey, this is a bullish trade. This is if the market's bearish today. And then you just go off about your business. And if the market hits either of those two levels, your trade executes. And then, once it gets out of those levels, your sale executes and you're done. And you're out there, doing your job, like teaching school children or being a doctor or a nurse or, driving a truck.
Yeah, it's interesting about, because, it's an interesting thing because I always look at it as potentially more stressful because of that. But in certain instances, it's actually less stressful because you can literally just do it and then you can cash out or whatever and do nothing for a couple of weeks, go on vacation and not necessarily think about it, right? Yeah. Not even think about it, right? As opposed to you have a bunch of long-term positions. And I'm not saying you shouldn't have long-term positions. Obviously, that's 90% of what we do. But you don't want to be looking, oh man,
checking those every
you're on the
15
beach,
minutes
the market's getting crushed, and you're oh, what's it going to be like when I get back or whatever. This is sort of hey, get in, get out, and kind of do it. So it's an interesting angle, and there's certain times in market cycles where it's more advantageous, and this seems like one of those, right?
Definitely.
Just because all the volatility.
Yeah, lots more opportunities, bigger moves, lots more opportunities. You've got things like I mentioned them earlier, 0 days to expiration options. So, back when I first started on Wall Street, you had monthly options on companies and they expired on the fourth Thursday of every month. And that was it, and you had European style, which can only be exercised on their expiration day, and you had American style, which can be exercised anytime before their expiration day. But that was it. And then they started adding weekly options for companies. And so those would expire on Friday every week, you know, and so that gives a little bit more excitement, and you can bet like a little bit more short term. And they started introducing, this is funny because a lot of people didn't catch on to the 0DTE options until like a couple of years ago. They really exploded in popularity.
You've seen a lot more of it recently.
But there's been 0 days to expiration options on the S&P 500, the SPX ETF, since like 2003, I want to say, maybe 2005.
Oh, really?
Yeah.
Okay.
So it's been a long time. It's been like over 20 years at this point. It's just they exploded in popularity back in like 2022, and then grew more in 2023 and more in 2024.
Interesting.
And it's just it's really interesting, and it makes it more exciting because what happens is that when you're trading things that you have a very small window to be traded in, a lot of times there's not that much interest. So maybe you can buy it, but you can't sell it. You know, you don't have the liquidity that you need. But because these options have exploded in popularity, you've got tons of liquidity. There's literally always a buyer for every seller.
Interesting.
And always a seller for every buyer. And it's such a big market. You know, we're talking about the SPX. That's like the biggest ETF in the world, like trillions of dollars of assets under management. It's too big to be manipulated.
Yeah.
Right? So you can't have people who are like, you know, taking the other side of your trade on the SPX, you know, just so that they can take your money. Because you can't manipulate something that big. It literally moves with the market.
Yeah, that's what some of these where they're like very thinly traded options, and they can really have these wild swings. So if you're doing, that's interesting. Yeah, I know we're gonna get into more of that type of stuff because people are interested in doing it. And like I said, there's certain times in the market cycles where, you know, trading makes sense, and you know, we want to just, you know, point people in the right direction, whether it's like, you know, following one of our newsletter writers or even just other people that are doing like something interesting. Because like I said, you're not going to, you know, be able to become a 0 DTE or whatever options expert and all the other stuff that you're doing, you know?
Right, exactly. You know?
So we, you know, we'll pinpoint and we'll bring people in if they're doing something good and put that in front of people. But if not, then we'll introduce other people that we think that are interesting out there that we've sort of already kind of vetted, which is interesting.
I mean, that's part of the cool thing about, you know, being in the position that we're in here is that, you know, I mean, especially me, like I came from Wall Street, so like I have a pretty good understanding of finance. My degrees are in finance and economics. Like I have that background. So, and I'm, you know, in this industry. So I get to meet all the people in the industry, and I get to meet the up and coming people. And because I kind of have that, you know, that financial background and that sort of ability to like pick through, you know, the marketing and see like what's really going on behind the scenes.
Yeah, is this BS or not?
Yeah, exactly. Yeah. You get to see who's for real and who's just talk, and you know that's cool. And that's one of the reasons that I left Wall Street, that I left Morgan Stanley, was because I wanted to help retail investors, not, you know, people who were already super rich. And I think a great way I can help retail investors is by introducing them to people who have successful strategies, you know, after I go through and see if they're really as successful as they claim to be. Right.
So that's interesting. I'm excited to kind of dive in and learn more about it. I've done some crypto trading in the past, but
it's stressful, right?
Yeah.
It's stressful. It gets really stressful, you know, and it takes a lot of time. And what I really like about the strategy that I've been talking about here is just that it doesn't take a ton of time. You know, you get an alert in the morning, and if you want to make the trade, you place it, and then you go about your day, and then you can check at the end of the day. And if you want to, you can watch. You know, if it's fun to watch the chart all day, like you can, you know, but that's kind of stressful. So why bother? You know.
And the one thing I don't see us doing, though, and maybe I'll eat my words here, is meme stock trading.
I don't know. Maybe meme stock shorting, you know. I used to know a guy who he would look for stocks like that
just
were
got
a lot
really,
of story and not much substance, and he would just short them.
Yeah.
Yep.
So, all right. Thanks for coming in again.
No problem.
Jason.
Thanks for having me. I love being
And like
here.
I said, keep an eye out for the top 10. It's a great video, and like and subscribe, and we'll be back soon. See ya.